Imagine waking up 90 days from now. You check your bank account, and for the first time in a long time, you're not stressed. You know exactly where your money is going. You've started building savings. Your credit card balance is moving in the right direction. And instead of living paycheck to paycheck, you finally feel like you're in control. Now, let's be clear. 90 days probably won't make you rich, but 90 days can completely change the direction of your financial life, because financial success usually doesn't come from one big decision. It comes from hundreds of small decisions repeated over time. In today's video, I'll walk you through a simple 90-day plan that anyone can start. No complicated investing strategies, no get-rich-quick promises, just practical steps that can help you build better money habits and create a stronger financial foundation. Let's begin with the first 30 days. Month 1. Face reality. Most people think their biggest money problem is not earning enough. Sometimes that's true, but for many people, the bigger problem is not knowing exactly where their money goes, and you can't improve what you don't measure. So here's your first challenge. For the next 7 days, track every single dollar you spend. Morning coffee? Write it down. Online shopping? Write it down. Subscriptions? Write them down. Everything. You might think you already know where your money goes, but once you actually track it, the results often come as a surprise. Many people discover they're spending hundreds of dollars every month on things they barely remember buying. Not because they're irresponsible, but because small purchases are easy to ignore until they add up. Money leaks are rarely one huge expense. They're usually dozens of tiny decisions. Build a simple budget. Now that you know where your money is going, it's time to give every dollar a purpose. Notice something important. A budget isn't designed to stop you from enjoying life. It's designed to help you spend intentionally. Think of it as a roadmap. Without a map, you might eventually reach your destination, but you'll probably waste time, energy, and money along the way. Your budget only needs 4 basic categories: housing and bills, food, savings, everything else. That's it. Don't make budgeting more complicated than it needs to be. The simpler your system is, the more likely you'll actually stick with it. Remember, the best budget isn't the perfect one. It's the one you'll consistently follow. Find the hidden expenses. Here's something most people never do. Open your bank statement from the last month. Now ask yourself one question. If I had to buy this again today, would I? If the answer is no, that's a hidden expense. Streaming services you never watch, apps you forgot about, gym memberships you don't use, impulse purchases that brought excitement for one day but offered little long-term value. The goal isn't to eliminate everything you enjoy. Life should still be enjoyable. The goal is to stop paying for things that no longer improve your life. Even reducing a few unnecessary monthly expenses can free up money for savings, debt repayment, or future investments. Small changes repeated every month can have a meaningful impact over time. Start your emergency fund. Now let's talk about something that can protect your financial future. Unexpected expenses. Cars break down, medical bills happen, home repairs happen, life is unpredictable. Without savings, many people rely on credit cards or loans when emergencies happen. That can make an already stressful situation even harder. Instead, make your first savings goal simple. Don't worry about saving thousands of dollars immediately. Just focus on building the habit. Maybe it's $20 a week, maybe it's $50. The exact amount matters less than creating consistency. An emergency fund isn't just money in a savings account. It's peace of mind. It's knowing that one unexpected expense doesn't have to become a financial crisis. End of month 1. By the end of the first 30 days, you probably won't feel wealthy, but you'll have something even more valuable: clarity. You'll know where your money goes. You'll have a realistic budget. You'll cut unnecessary spending, and you'll begin building a financial safety net. Those 4 steps create the foundation for everything that comes next. Because before you can grow your money, you first need to take control of it. In the next part, we'll focus on the next 30 days, where you'll learn how to reduce debt, build smarter money habits, and make your income work harder for you. If you've completed the first 30 days, you've already done something most people never do. You stopped guessing. You started paying attention. You know where your money goes, you've built a basic budget, and you've started saving consistently. Now it's time for the next step. This is where many people quit. The excitement fades, old habits return, and progress slows down. But if you can stay consistent for the next 30 days, you'll begin creating habits that can last much longer. Let's get started. Step 1. Attack high-interest debt. Imagine trying to fill a bucket with water while there's a hole in the bottom. No matter how much water you pour in, it keeps leaking out. That's exactly what high-interest debt can feel like. If you have credit card debt with a high interest rate, making only the minimum payment can mean paying much more over time. If possible, continue making at least the required minimum payment on every debt to stay current. And consider putting any extra money toward the balance with the highest interest rate first. Many financial educators call this the avalanche method. Another popular approach is the snowball method, where people pay off the smallest balance first to build motivation. Neither method is perfect for everyone. The best strategy is often the one you'll consistently follow. The important thing is to have a plan instead of letting debt grow on its own. Step 2. Increase your income without depending on luck. Cutting expenses has limits, but increasing your income can create new opportunities. That doesn't mean you need to quit your job tomorrow. Instead, ask yourself one question. What skill could I improve over the next 6 months that might increase my earning potential? Maybe it's learning Excel. Maybe it's improving your communication skills. Maybe it's earning a professional certification. Or maybe it's freelancing on weekends. Even a small increase in income can make saving and paying down debt much easier. Focus on building skills that provide long-term value rather than chasing shortcuts. Step 3. Stop lifestyle inflation. Here's something that quietly keeps many people stuck. Every time they earn more, they immediately spend more. A raise becomes a new car payment. A bonus becomes a shopping spree. A promotion becomes a more expensive lifestyle. The result? Their income grows, but their financial stress doesn't change very much. Instead, try this. The next time your income increases, consider directing part of that increase towards savings, debt repayment, or investing before increasing your spending. That way, your future benefits from your success, not just your monthly expenses. Step 4. Make saving automatic. Willpower is unreliable. Systems are powerful. Many people save successfully because they remove the decision altogether. Instead of remembering to transfer money every month, they automate it. When money moves into savings automatically after payday, you're less likely to spend it impulsively. Even if the amount is small, consistency matters more than perfection. Saving regularly is often easier than trying to save whatever is left at the end of the month. Step 5. Learn before you invest. By now, you may be thinking, should I start investing? The answer depends on your personal situation. For many people, building an emergency fund and managing high-interest debt are important priorities before making higher-risk investments. If you do decide to invest, start by learning the basics. Understand concepts like diversification, risk, long-term investing, and the difference between investing and speculation. Don't invest in something simply because it's trending on social media or because someone claims it's guaranteed to make money. Every investment carries risk, and no strategy can guarantee profits. Knowledge is one of the best investments you can make. End of month 2. At this point, your financial life should start feeling more organized. You're no longer reacting to money. You're making decisions with purpose. You have a budget. You're reducing unnecessary expenses. You're working on debt. You're saving consistently. and you're investing in yourself by improving your financial knowledge. These may seem like small actions, but over time, small actions repeated consistently often lead to meaningful results. In the final part, we'll focus on the last 30 days, how to build lasting financial habits, avoid common mistakes, and create a simple plan that can continue working long after these first 90 days are over. If you've made it this far, congratulations. You're already ahead of where you were 60 days ago. Not because you've suddenly become wealthy, but because you've changed something even more important, your habits. And in personal finance, habits often matter more than short bursts of motivation. The final 30 days aren't about doing something dramatic. They're about building a system that keeps working long after these 90 days are over. Step 1. Build a financial routine. Successful people don't make perfect financial decisions every day. They follow a routine. Choose one day each week, maybe Sunday evening or Monday morning. Spend just 20 minutes reviewing your finances. Ask yourself, did I stay within my budget this week? How much did I save? Did I spend money on something I didn't really need? Am I making progress toward my financial goals? Think of this as a weekly checkup for your money. Small course corrections today can prevent much bigger problems later. Step 2. Set goals that actually motivate you. Saving money without a purpose is difficult. Your brain needs a reason to stay disciplined. Instead of saying, I want more money, try saying, I want a 6-month emergency fund. I want to pay off my credit card. I want to save for a home down payment. I want to retire with financial security. Specific goals make daily financial decisions much easier. Before every major purchase, ask yourself one question. Does this move me closer to my goal or farther away from it? That single question can change the way you spend money. Step 3. Protect yourself from lifestyle traps. As your income grows, your spending will always try to catch up. That's called lifestyle inflation. The more expensive your lifestyle becomes, the harder it is to build wealth. Instead of upgrading everything every time you earn more, upgrade your future first. Increase your savings. Invest in your education. Strengthen your emergency fund. Then enjoy the rest without guilt. Financial freedom isn't about looking rich. It's about having options. Step 4. Keep learning about money. One of the best investments you can make doesn't require the stock market. It's investing in your financial knowledge. Read books, listen to trusted financial podcasts, watch educational videos, learn how taxes, retirement accounts, investing, insurance, and budgeting work. The more you understand money, the more confident you'll become when making financial decisions. Remember, financial education isn't something you finish. It's a lifelong skill. What happens after 90 days? Let's be realistic. After 90 days, you probably won't become financially independent. Most people won't double their income. Most people won't become millionaires. And that's okay. What you can achieve is something much more valuable. You'll understand where your money goes. You'll spend with intention instead of impulse. You'll have a growing savings habit. You'll be making progress on debt if you have it. You'll feel more confident making financial decisions. And perhaps most importantly, you'll prove to yourself that change is possible. Because improving your finances isn't about finding one perfect opportunity. It's about making hundreds of smart decisions over time. Those decisions may seem small today, but months become years. Years become decades. And that's how many people gradually build financial security. Final thoughts. If there's one lesson to remember from this video, let it be this. You don't have to change your entire life overnight. Start with one habit, then another, then another. Progress is usually built one decision at a time. 90 days from now, you'll either wish you had started today, or you'll be grateful that you did. The choice begins with the next financial decision you make. Thank you for watching. If you found this video helpful and want more practical, evidence-based personal finance content, consider subscribing and joining us for the next video. Until then, take care of your money so it can take care of your future.